And that was the big thing that came out of that coaching. You know, I understood a lot more what I was going to do or what I was doing. And there was a second element. I don't think I was really a risk taker before the coaching. After the coaching, I became a risk taker who used analysis to help me take and manage my risks and understand the market. So at that point, mid-career, I became a risk taker. And that changed everything for me.
Sitting down today with Steve Goldstein, looking forward to talk about his trading experience, 25 years of trading, also now coaching traders. So Steve, welcome on the podcast. First time we have you here. Looking forward to talk trading and kind of see how you can share experience with other traders.
Pleasure to be here.
Tell me a bit more about what you're doing these days and what you're focusing on at this point in your career.
Okay, so, I mean, I was, just to sort of get some context, I started in the markets in 1986. So I've got a long and deep history in the world of trading. I was a trader, professional trader for 25 years, working for investment banks here in London. And I made a choice in about 2010 to become a coach working with traders, to hang up my professional trading boots or gloves, however you want to put it, and start learning how to be a coach, starting to working with traders, starting to study different aspects of how you improve performance for people when it comes to the, let's call it the mental, behavioural, psychological challenges of trading, where most of the blockers are to growth. And I've been doing that ever since. Again, working with professional traders, individuals in hedge funds, individuals in investment banks, energy and commodity trading firms, as well as with many private traders. And I also produced a book earlier this year, Mastering the Mental Game of Trading, which is a collection of my thoughts and ideas and philosophies around how you deal with the psychological challenges of taking and running risk.
Tell me about how you started trading and how you come across trading in the first place.
Okay, well, it was the mid-1980s. I was a young guy. I was in my early 20s. And it was really just the early days of what I would say is the trading revolution. Until then, it was done in old-fashioned stock exchanges, and there wasn't a lot of trading. Up till that point, we had a lot of closed markets, a lot of fixed markets. And then in the early 1980s in the UK and US and certain other parts of the world, the market started opening up and lots of new ideas were created, lots of new exchanges appeared, lots of new derivative forms of derivative, different forms of trading products were created, and they need lots of young people with lots of energy and enthusiasm to start trading those. And I managed to find a job. I heard about it from a lot of other people. People were talking about it. And I managed to land a job at a Japanese bank in London. And it carried on from there.
How did you learn your way to trading? Was it through mentors, or did you have to kind of learn by yourself, or what made you become successful at it?
Well, you kind of, there wasn't really a blueprint for it in those days. That like I say, it was just opening up. It was new. There'd been a little bit going on. It'd been done in a very different way. Suddenly the opening of the markets, the expanding of the markets, the new products, required a whole different approach. And there were new opportunities as well. So you literally were just joining a lot of people all about your age who also didn't really know much about how to do it. I would say much of it was being made up as we went along. We learned from each other. We learned by experience. We learned through trial and error. There was elements of sink or swim. You found certain markets or products or styles that suited you, and then you went down that road. And then when you decided that didn't really suit you, you tried something else, and then you tried something else. And if you survived and made it, and many didn't. If you did, you could then forge a career out as a trader and continue to learn and grow. And I think that was very much the way for many traders, and I think it still is the way for many traders.
What do you think makes a difference between the guys who survived and those who didn't, who eventually maybe quit trading or changed career?
There was a lot of luck. Luck was a big part of it. There would have been right place, right time, right people to learn from. That's often what I mean by luck. there would have been elements of how you are as an individual. So I suppose we could say that, not ironically, a lot of the people who are kind of crazy risk takers, too risk tolerant, not all of them, but many of them fell on their own sword because, they were just taking too much risk and would get taken out of the market. Some learnt from that and came back and started again. Other people managed to survive. There was a lot of fat in the market in those days. There was a lot of money to be made. You didn't have to be particularly skilled to at least survive. And then you had time to go through the learning experiences. And I think the learning experiences, the learning part of it is so important because it's a multi-year learning game to become good at this and to become excellent at it. A lot of people just don't survive or don't manage to sustain themselves during that multi-year learning period. And it is that which leads to a lot of people. We use the word failure, but I would say it's not even failure, it's just attrition. A lot of people suffer attrition during the early days because they just, they're not, it's almost like a bit of a loop. You're not good enough to make a lot of money, and you need to be making money to survive, to live off, to continue doing this, to tell yourself that you're good enough to do it. It is a little bit of a sort of luck does play a part in it, that you can survive that.
How were the expectations back then? Did you have a certain target to reach to be able to stay at a firm, or could you just do whatever you wanted, kind of any return was acceptable, or what did they expect from you to make?
Do you know what? There wasn't a lot. First of all, I was in a market making role. I was in a franchise firm. So the firm had a business. They needed people in seats. They needed people to run certain books, to quote prices to clients and customers, to manage those books, and obviously to generate some income doing it. They weren't necessarily overly ambitious targets. They paid you well. There would be bonus structures attached to it. So there was a degree of comfort in the beginning. As the industry matured, as you became more senior, as you moved around to different firms with different expectations, as the industry matured, you started to have budgets set and targets set that you had to try and achieve. So, I moved from the Japanese bank after a few years, which had been a really good grounding place, onto another sort of small European bank. And then I found myself with a large investment bank, which was Credit Suisse, which was a serious player. And there was pressure to perform, pressure to achieve results, pressure to take risk and manage risk. So we had budgets set that were relevant to that sort of firm, that sort of industry, the sort of capital that you were in charge of, or the size of the books being in a bank. We didn't really talk about capital, but we talked about, how much risk we were allowed to take and what they were expecting you to generate in terms of P&L from that.
Did you have to, at any point, work on your mindset at that time, or did the mindset work kind of came later when you started to coach traders?
Do you know what? It wasn't really a discussion, but I think it was it was something that everyone dealt with themselves. The job, this job by nature, dealing with markets, dealing with uncertainty, dealing with unexpected moves, it's something that freaks you out a lot of the time. And we all have to manage ourselves through that. The first month that I ever ran risk, and I wasn't trading equities, I was trading interest rate products, bonds and foreign exchange. But the first month that I traded was October 1987. That was when I was given my first book. And in that same month, the US stock market had a 50% crash in one day. And that created, it was a huge liquidity event. It created waves everywhere. It affected every market. It's a famous story. It goes down in folklore, that story. And experiencing something like that at the very beginning immediately wakes you up to the mental challenge of this job. How do I cope with this? How do I survive it? Almost becomes the first question. And then how do I thrive in it? Until then, there was never really a focus on getting the mentality right. but it was you just have to perform, and that was it. And I think it's the same evolution that we've gone through in performance in other areas, such as sport, music, acting. People learn to be actors. People learn to be sportsmen and athletes and sportswomen. People learn to be musicians and singers. Now they learn so much more about the mental side of this. How can you perform at your best? How can you stay sane? How can you remain above the fray? How can you not get taken down by the psychological challenges of this job? How can you not panic and lose it when you're meant to perform? All those sort of things. There's a greater understanding of it, but there wasn't really a discussion of these things going on at the time.
Interesting. So these are newer concepts that people kind of focus on more these days compared to in the earlier days when you were trading.
Yeah, it just, it was known that it was part of it, but people kept it really to themselves, and, there weren't any books really written about it. There was no, it wasn't a conversation piece even.
So tell me about what motivated you to start coaching traders, going from actually trading to coaching people to succeed in trading.
It kind of, I suppose the motivation came from a conversation I had with my former coach. I was at a sort of crossroads in my career. I'd been trading really well. In fact, I'd been trading the best I've been trading. And I was looking at new opportunities. It was just after the financial crisis, the global financial crisis. The bank I was at had been sold to another bank. They didn't retain the prop trading aspects, which I was part of when that happened. So I was looking at different offers, new opportunities. I was weighing up certain job offers that I had that I wasn't particularly sure I wanted. I had a desire to take what I was doing into the hedge fund world. But after the financial crisis, there weren't a lot of opportunities there because they'd been hammered quite a bit as well. And I was in a conversation with my former coach, and he just said, "Have you ever thought about becoming a coach, coaching traders yourself, based on what you know?" And when he said that, I was like, there wasn't even a doubt. I just decided that was what I wanted to do. Now, there is some context there. 10 years earlier, I started working with him. Now, at that point, I was 13 years into my trading career. And I sort of can really divide my trading career into two halves. The half before coaching, when I was someone who thought I knew what I was doing, who was reasonably good, who had some successes, but, was probably at that point in my career struggling and not doing well at all and lost confidence, to the part after coaching, the 10 years after coaching, where I traded far better, far more successfully, with far greater confidence, took far more risk, was far more comfortable sitting with risk, and was far more successful. And there's a very clear delineation that was working with that coach had a huge impact on me and really changed the trajectory of my performance. I may even have given up trading by that point. I was even, considering alternative careers when I started working with a coach. So when he, after experiencing that, made that suggestion, it was like, that's what I want to do. I thought I could carry on trading on the side whilst doing it, but I sort of gave that up after a short time because, it wasn't possible to do it as a side hustle. And I decided this was the direction I wanted to go in.
What did that coach do with you that you think made a difference?
Made me more self-aware. That was it. Made me more aware of who I was, of how I was doing the job, of my situation and context when doing it. There's something which happened earlier this year, which really threw it into. I mean, I've thought about it for many years, but really threw it into a very strong light. I was having a conversation with the CEO of one of the firms where I coach their traders, and we were discussing. He asked me a similar question to the question you just asked, And one of the things I said to him was, one of the ironies, one of the paradoxes of all of this is that although I traded much better, enjoyed it a lot more, was a lot more confident in the latter years, it was also more stressful because I was engaging with risk far more. And you're always going to be stressed when engaging with risk, when engaging with uncertainty. And it was one of the things I always struggled with, the idea that I was performing a lot better, I was taking a lot more risk, and yet I was a lot more stressed when, you might have thought, well, I was less stressed. But he said to me, look, it was the fact that you were taking more risk and engaging with more uncertainty, which upped your stress levels, but you could live with that. And that was the big thing that came out of that coaching. I understood a lot more what I was going to do or what I was doing. And there was a second element. I don't think I was really a risk taker before the coaching. After the coaching, I became a risk taker. And risk taking is stressful. And what I mean by that is I over-relied on analysis up till that point. And I think of myself now as, for the first 13 years of my career, as someone who really was maybe more of an analyst who traded. And then after that coaching, I was a risk taker who used analysis to help me take and manage my risks and understand the market. But it was just a tool. So at that point, mid-career, I became a risk taker. And that changed everything for me.
So trading on one side is like you could trade at your own time, at your own computer if you want to. You don't have to have really a lot of human contacts. When you coach traders, you gotta kind of make them act, make them change something that they do, make them kind of course, be self-aware, like you mentioned. Do you find it's tougher to get that into traders to kind of make them act and make them change than to just do it yourself?
Let's start with this thing about becoming a risk taker. When we learn trading, okay, so if I started now, if I'd never traded in my life, I'd probably think it's a puzzle that I need to solve. Okay, I need to find a way to identify opportunities in the market. That would probably be done with analysis, following the market, understanding the narratives, understanding what's driving price, and then finding a system that identifies favourable setups, and then trying to apply that system whilst following the price in the market. And assuming that system, without any proof, but probably assuming that system or method or approach generates a return over time. That is what I would imagine I would do. And I sort of did a form of that when I got into the job, and I kept following that sort of pattern. But you don't really understand what the job is, because the job is about you, it's within you. Okay, it's not what you do with the market. There's two elements. What I'm just describing there is the transactional aspects. And we just think about that. I would not be thinking about myself. How do I make myself better? How do I become better at what I do? How do I develop myself so I do those things better? And how do I understand the interconnectivity between who I am, the person doing those things, and the actual doing of those things in the market? So I should imagine that I probably would not be thinking about working on myself. And that was what happened in my own trading. I didn't work on myself. I knew the psychology was important. I actually read books on psychology, and I was always interested in it. But I took an academic interest in it rather than a personal interest in it, rather than thinking it's me who needs the work, but rather than thinking I just need to understand it, and if I do that, then I can work better. And I think this is part of the challenge of doing this job on your own, alone, at home. Everyone thinks it's the transactional elements of the job. I just need to find value. I just need to identify setups. I just need to place them. I just need to follow the market. I just need to follow the news, the data, maybe construct a system, and the results will follow. But we know it's not. It's a performance activity. It's a lot more challenging than that.
I'm sure you hear this a lot, but a lot of traders are looking for ways to be more disciplined. Tell me what you would recommend for these guys who want to have more discipline in their trading, either like following setup or not being impulsive, or maybe kind of they have to jump in more often? What can they do to build a discipline?
Well, they can read my book for a start. So it's called Mastering the Mental Game of Trading. I talk about these sort of things a lot in the book. And part of the problem with the idea of discipline is discipline is just a symptom. That's all it is. It's a symptom of something that goes much deeper. Okay. It's the part we see. We think, God, I should have done that, right? Should have done that, or why didn't I do more, or why didn't I do that, or etc., etc., etc. The problem is that there's usually a lot going on below the surface, a lot going on deeper. The issues that lead to ill discipline or a lack of discipline are way below the surface. Think of an iceberg analogy. You only see 10% of the iceberg, 90% of the iceberg is below the water. With behavior, with psychology, we only see the outcomes of what's happening below the surface. And we give them labels. We call them in discipline. We call it FOMO. We call it impatience. We call it perfectionism. But actually, there's a lack of a true understanding of what's really happening, both within your process, both with the realities of the uncertainty of the market, the realities of how we cope with uncertainty. Misunderstandings in our system or method, where we're using a system or method, or we're taking trades which we shouldn't be. They're not made for us. They're made by somebody else. They fit somebody else. We haven't evolved our own approach, which suits us and aligns with who we are. We might be using too much capital. We might be putting too much money on it. We want to be, for a lot of people, they want their Lamborghini at the end of their first year. They don't want to wait 20 years to get their Lamborghini, which is the reality if they ever get one at all. If they're going to get one, it's probably luck. They probably put on a big trade. They've gone to the casino. For a lot of people who make money quickly, they go to the casino, they make a lot of money. They put on some lucky bets, they work out, and then the Lamborghini goes back, the money disappears, because luck is not a companion to rely on to succeed in this role. That's why, a lot of people are getting into trading early. They get into a wave. They get into something which is fashionable, popular, making money at that point. Quite often, that's how people start. When I started trading, I would say my initial interest was because everyone was talking about penny shares, penny stocks. That was the big thing in the mid-1980s. Everyone was talking about it. It was the crypto of its day, or it was the small caps of its day, or it was the Tesla of its day. Everyone heard a story of someone who bought a penny stock, and the next year they were a multi-millionaire, and those stories become legendary. They get passed around in the media, social media these days, but the media in those days. You hear about it from someone else, I want to do that, I want a bit of that. And for a while it works. We saw that in 2020. There was a huge amount of liquidity went into the market because of COVID and the COVID measures, which caused a huge, rally up in many, sort of small cap stocks and in crypto coins as well. We saw the meme stock sort of craze. And you didn't need to be skilled or have any ability to make a lot of money there. You just had to buy and hold at the time for a while. These crazes have been going back. That's human nature. This has been going back centuries. You got the tulips in Amsterdam in the sort of 17th century, the tulip craze, the South Sea bubble. And they keep happening. And a lot of people make a lot of money jumping on those. And they usually end up getting ruined by those. That is not trading. That's just buying a lottery ticket, jumping on a craze. But it does suck a lot of people in. Most people don't learn to trade. This is my point. They want the instant hit, the instant win. They're not willing to go through that learning process. Whenever you meet really successful traders, they've been through the learning process. They may have got sucked in initially by one of those phases, one of those crazes. They may have initially made a lot of money. Then they saw it all disappear. And then they'll say, okay, that hurt, that was painful, but I've got to find out. I do love this, and I've got to find out how to do it properly. And then they spend quite a few years learning and building up, and indulging in their passion.
If you do go into real trading, how do you figure out what's right for you? Like how much risk you should take? Like what kind of steps are good for you? What kind of methodology works for you? How do you figure this all out?
From other people, it's very hard to figure it out for yourself. The greatest thing you could have is a mentor or mentors. Okay, nearly every successful trader I've ever met or I've ever coached, and I do engage in these very in-depth conversations with people, they usually have a mentor. Now that mentor may not be someone they even know. It could be someone whose book they read or who they followed online. They often have multiple mentors. They may not even be from trading. Okay, but they inspire them and they follow them, and they realize that they can take bits from them. But you need to look at what other people are doing. And there's many great books out there written by successful traders. There's the Market Wizard series of books. There's the books by Mark Douglas. There's books written by great traders like Mark Minervini. If you read that and you decide you want to adopt his style, there's a lot of information there about risk sizing, position sizing, how to do it properly, risk management. So same in the Mark Douglas books. These are people who have done it and made money, and they're telling you about it. Okay, you don't need to adopt their way, because you might find a slightly different way of doing it. There's lots of different styles of trading. There's lots of different categories of trading. If you do go into some way of growing your capital that's successful, you're not doing anything new. You're doing something that's been done before, but you have probably taken bits from other people, things you've learned, things you've read about.
Is there any way to know whether the style you use now is not the right style for you? Like, so maybe someone is like into scalping, but then they realize that style is not good for them. How would they figure this out?
Yeah, well, again, there's a lot of trial and error goes on. Some people are great scalpers. They're made for scalping. Their personality style suits that. Other people are not made for it. When I coach people, I run personality psychometric profiles. And whilst I believe anyone can be successful at trading, you have to work in a way which suits your personality and aligns with who you are. There's a certain group of people that I meet that are incredible scalpers. They've got the personality style for it. They're highly intuitive individuals. They're great at pattern recognition. That they almost seem to know what's happening before it happens. They jump on the market, they get in and out. They also respect rules of mismanagement, things such as that. They're not going to put on crazy risks. I had some clients that featured in Jack Schwager's last book, Unknown Market Wizards. And some of them were the most incredible scalpers, but they did an awful lot of work behind it. They weren't just in and out all day long multiple times. They waited for their moments. You probably wouldn't even call them scalpers, but it would be a description of at least one of their style. And they learned from great people. They went through a development program at a prop firm. They honed in their technique, and then they pushed it out. They had failures. They lost money at the beginning. They blew up or nearly blew up several times. They learned from those. They listened to other people. And over time, they started to develop a style. Another one who learned at the same time, who was also featured in that book, Market Wizards, started off as a scalping style because that was what they wanted them to do at that prop firm. But he started to go further down the curve, take positions, hold stuff for longer. Still would scalp sometimes, okay, but generally form views on the market, built up risk positions and ran longer term risks in many different markets. So, there's a multitude of different styles. Someone I'm working with who I'm coaching later on today, who's someone who I've worked with for a few years now, incredible prop trader, Started out doing this job, spent 3-4 years learning how to do it, didn't really make an awful lot of money. Then, started to find, find a path forwards. And, his first big profitable year, he earned 6 figures. His next big profitable year, he earned 7 figures. His next big profitable year, he actually earned 8 figures. This didn't happen overnight. This is a great example of a story. It didn't happen overnight, and he got mentored by other people. He learnt from others. He built his confidence in himself and his style and his approach. There was a lot of luck because the big 8-figure year and the big 7-figure year were 2021 and 2022, insane years in the markets. There was stuff going on everywhere. There was incredible volatility, and it just worked for him. The subsequent year wasn't so great because that level of volatility which he needs for his style wasn't there. It didn't mean he became a bad trader. Sometimes you need the markets to work for you to suit your style. So you can be an amazing trader and not even make any money in a year because the markets are not working for your style. This is one of the things that people also need to learn about this job. It's not a job where you're always going to generate an income. You're going to generate incomes when the conditions are right. But you also have to be a good trader, means surviving when it's not right, not giving back your profits, sort of staying above headwater. A lot of people think trading's just about making money. It's not. It's also about survival. That's why the risk management part is so important.
That should be a good motivation for people to go read your book also. So feel free to mention your book, where they can find it, and how they can connect with you after this interview.
Okay, so you can see it over my shoulder there. It's called Mastering the Mental Game of Trading. And there's an Italian version next to it. Hopefully there'll be some more foreign language. The Italian version is called Pensa come un trader. It really focuses in on, and I use frameworks which I've taken from my studies in psychotherapy as well, to really help people understand the game they're playing, both the psychological, the mental game, and the physical transactional game. And the two of them, they're not mutually exclusive. One supports the other, one requires the other one to be strong at it. And to understand that it's a process, it's a set of processes, it follows a pattern, you have to work within that. You're engaging in the outer game, which is the transactional game you play against the market. And then you're engaging on the inner game, which is the internal game you're playing against yourself, where quite often you're battling your own ego, and that often becomes the source of the very challenging emotions that we feel when we're doing the job. And you're playing that outer game and that inner game at exactly the same time. And if you can play those two effectively, that's where the mental game is played. And that's what you're trying to master. And that's what you're trying to win in order to succeed in this job. And if you don't master that aspect and those co-elements, you're just not going to succeed in this job. It's that simple.
Awesome. Definitely good words. Thank you, Steve, for your time. I appreciate the advice you gave to my listeners here. There's been a lot of value packed into this, and hopefully they can connect with you, check out your book. I'll put the link below for the book. They can directly check it out there. And I really appreciate your time, and we'll connect soon, start training again for sure.
Okay, lovely. And if people want to follow me on social media, I'm out there. I post regularly on Twitter, just kind of regular thoughts about this sort of field and subject. My Twitter handle is @AlphaMind101. I also post occasionally on LinkedIn, just using my name, Steven Goldstein. So do feel free to follow me on those routes as well.
Awesome. I've seen your profile. You post a lot of good stuff on Twitter, so for sure people can follow you there.
Thank you very much.
Appreciate that.